As we heard already early in the course, data integration is the process of combining data from multiple sources into a unified system, ensuring seamless data flow, consistency, and accessibility. In banking, data integration enables real-time information exchange between core banking systems, customer relationship management systems, risk management platforms, compliance databases, and third-party financial services. Why does data integration matter for banks? It enhances customer experience and personalization. It provides a 360-degree view of customers across the multiple channels, online banking, mobile apps, and branch services, as well as it enables AI-driven personalized financial recommendations. For example, loan offers and investment insights. Stay tuned, you will hear in one of the upcoming lectures more about that. Furthermore, for example, in the realm of risk and fraud detection, it integrates real-time transaction monitoring to identify fraud patterns. It facilitates AI-based anomaly detection by analyzing data from different banking sources. It ensures regulatory compliance and auditability. It helps banks to comply with AML, anti-money laundering, KYC, Know Your Customer, Basel III, GDPR and BCBS 239 regulations. It automates compliance reporting by centralizing regulatory data. It enables advanced analytics and AI adoption. For example, it supports predictive analytics for credit risk assessment and fraud detection. It unifies structured, so transactional data, and unstructured data like emails and chat logs for AI-driven insights. It reduces operational costs and it improves efficiency. It eliminates manual data reconciliation between departments and it enhances automated loan approvals, transaction processing, and customer onboarding. Let's talk now about the trade-offs banks face when rolling out integrated solutions. The key trade-offs banks have to consider when they are implementing integrated tech solutions are, among others, legacy systems versus modernization. Many banks still depend heavily on their legacy core banking systems. These systems have been around for decades and don't always play nicely with newer cloud-based or API-driven platforms. So here's the trade-off. If you stick with legacy systems, you save money up front, but you limit your ability to scale and adapt quickly. On the other hand, modernizing with APIs and microservices means a bigger initial investment, but it gives you a lot more flexibility down the road. What might be the smart move here? Use middleware tools like API gateways or enterprise service buses to bridge the gap between old and new systems. That way you don't have to rip everything out at once. The second trade-off, centralized versus decentralized data architectures. Banks need to decide how to handle integrated data. Do they go with a centralized data warehouse or spread it out across a data lake? As we already heard in the data warehousing and data lakes lecture, here's the dilemma. Centralized data warehouses are great for structured data, like what you need for compliance and reporting, but they are not super flexible. Data lakes, on the other hand, are perfect for handling large unstructured data sets, think AI and advanced analytics, but they come with governance challenges. What's the best of both worlds? A hybrid model, use warehouses where you need structure and control, and lakes where you need flexibility and innovation. Another trade-off is real-time versus batch processing. Some banking operations need data in real time, others work just fine with batch updates. Here's the trade-off. Real-time processing using tools like Kafka are great for things like fraud detection, but it can be resource hungry. Batch processing like ETL jobs or Hadoop are more efficient for regular reporting, but it doesn't give you instant insights. What is the ideal solution? Go event-driven for real-time tasks and keep batch jobs for things like reports and scheduled updates. It's all about picking the right tool for the right job. Let's now talk about the trade-off: data security versus accessibility. Finally, let's talk about data access. Banks need to lock down sensitive data, but also need to make it available to employees and customers when they need it. The trade-off looks like this: strong security measures like zero trust architecture and data encryption keep your data safe, but they can slow things down. Easier access through APIs and open banking tools helps deliver great customer service, but it can open up security risks. What's the balance? Use role-based access controls, secure APIs and encryption to give people access without compromising safety. To briefly wrap up this lecture, data integration is essential for modern banking, enabling seamless operations, regulatory compliance, fraud detection, and AI-driven analytics. However, banks must carefully navigate trade-offs between legacy versus modern systems, real-time versus batch processing, centralized versus decentralized storage, and security versus accessibility. Hybrid, API-driven and cloud-enabled approach ensures a balanced, scalable and secure integration strategy.